Hi everybody, my name is Matt Tyndall. I'm a developer on the insurance team at ConsenSys, and today I'm going to be talking about exploring insurance primitives for blockchain. I think this is an important topic to help kind of foster the ecosystem and kind of understand what tools are available to us now to help build out the decentralized insurance space. So first off, just to get on the same understanding, when I use the word primitive, I'm basically just talking about a foundational building block. And the creation of these building blocks helps to provide the ability to build and experiment with different things. It helps to ignite the imagination of developers. And an example of this would just be the ERC20 token standard. So think of all the things that have come out of that and how big of a boon that has been to the ecosystem. And so right now, Jake mentioned it a little bit, but there's sort of this, what I would call a Cambrian explosion in decentralized finance on Ethereum right now. What started from a couple of key protocols has basically resulted in this rapidly growing parallel financial ecosystem. And so projects like Augur and MakerDAO and 0x protocol have spawned all of these additional projects and tools where we now have stable coins and we have a relay network, we have Dharma, we have all these different projects that are basically being built in a totally decentralized way that are providing these new financial primitives that we can use and build off of. So what's possible in 2018? Well, we have stable coins, and stable coins, if you're not familiar, are just crypto assets that maintain a stable value against a currency like the dollar. We have a number of those, and you can kind of pick your level of decentralization and trust with them, whether you want to use DAI, which is fully decentralized, or some of these dollar-backed stable coins from Coinbase or Gemini or other companies. We have non-custodial or decentralized trade protocols. I mentioned 0x, we have AirSwap, we have Kyber, we have Bancor, and more. There's many ways that you can kind of trustlessly trade tokens. We have the ability to create credit and loans from things like MakerDAO and Dharma protocol, derivatives. DYDX just released their short ETH token, which is completely decentralized. We have the ability to create token baskets where we can take many tokens and package them up into a single token to be transferred. And then finally we have prediction markets where we have Augur, Gnosis Olympia, and these allow us to utilize decentralized oracles and all these different settlement mechanisms. But the main thing to focus on is these are all open primitives, and they can be combined and used within the decentralized insurance space. So these are all tools that we have to help to foster the ecosystem. And so I mentioned that this decentralized finance, there's sort of this community ecosystem growing around called DeFi, and some of the ideas are just interoperability and open source software, accessibility and financial inclusion, and financial transparency. And again, these can be built on and used within our own ecosystem. So thinking about insurance for Web 3.0, with these tools at our disposal, how can we reimagine, improve, and reinvent the insurance for a decentralized world? What are the primitives that would help us to realize that vision? So today I'm here to talk about something we've been working on at ConsenSys called Asekuro protocol. It's a protocol that is aimed at insurance distribution, and it's based on some of the concepts from 0x and Dharma, if you're familiar with those projects. And essentially, what I'm talking about is a coordination infrastructure and a public insurance policy registry. It utilizes the concept of a relay network, similar to those other projects, and it introduces some new primitives for messaging between parties and for defining what it is, what an insurance policy is in a smart contract. So if you can see this, what we're looking at here is essentially a generic policy contract, and this interface specifies the features that all insurance policies must inherit to be compatible with Asekuro. And these are very basic things. The ability to start a policy, to register a premium payment has been made, to register that a claim has been made, get the premium amount that's been paid to date, get the expected amount of premium that should have been paid. All of these things are just the basic life cycle functions that you might expect from insurance. And so when you think about a policy contract, essentially within Asekuro you can think of it as a sort of template for a particular type of insurance. So on the right you see like a typical insurance form, and essentially all of these fields can be created into what you can think of as an order, and they become parameters that are used within the policy contract itself. So the first primitive I'm going to talk about is application order, and essentially you can think of this as a way to represent an insurance application within this protocol. Essentially you have someone who is seeking insurance. They create this application order. It's a data packet that just includes information about that applicant, and it's intended to be reviewed by an insurer. So in the typical way that you would have an application for insurance, this is basically taking that concept, putting it into a JSON object, including a signature from a private key, and then being able to pass that on to an insurance carrier. And it allows the insurance seeker to signal their preferences and the conditions that they may be interested in for their insurance. And this can be created in many different ways. So from the aspect of the user experience, this could be in a typical form that you fill out. It could be through a chat bot. It could be through creating some type of a profile that imports all the data. The important part is that the data just sort of gets combined into this data packet. And then on the other side of that, we have something called a policy order. And you can think of this as basically a quote in the insurance world. So this is something that an insurance carrier creates that includes a signature. And you can think of it like a bindable quote. So typically if you go on a website and you are looking to receive a quote for your insurance, you'll fill everything out, enter your information. They'll give you a number, but that might not actually end up being what your premiums are, or what the coverage that you're actually included is. And with this concept, it's essentially a pre-commitment on behalf of the carrier that they agree to these terms at this specified rate, and everything is basically signed off by them before it gets returned back to the applicant. And in turn, the applicant can then submit that on-chain to start the policy. So we've looked at a number of different types of insurance that can be modeled with this protocol. One of the first ones that we've built is renter's insurance, and it's based on Lemonade. If you're familiar with Lemonade, it's a pretty disruptive insurance company that provides homeowners and renters insurance. And this is an example of a type of policy that can be modeled in Asekuro. So in this particular policy, you, as the carrier, would define the coverage and limits, things like personal liability, personal property, loss of use, whatever the liabilities might be. You define the premium structure, which would represent the frequency that premium payments should be made. Payments can be made over tokens, so you can designate a token address to be used. You designate a deductible, a claims token, and the duration of the coverage. So essentially all of the pieces that go into the actual terms of the policy get included in the contract and are facilitated over the decentralized network. So I'll take you through a little example here. In this example, Alice is creating an application order signaling her request for insurance. And she will basically go to a website. The website will create this order for her. It includes her signature and any of the answers to a particular application set of questions. And then she can forward that on to the insurer, or potentially post that to a relayer, which would hold those multiple applications. The insurer then reviews the application and can return a signed policy order or a quote that defines those terms. You can see here an example of what that might look like. Designates the Ethereum address of the actual policy contract, and then all of the terms that are the parameters for that template, as well as the private key signature. Alice can review that quote and maybe others that she's received and instantly accept that policy by sending it to the Asekuro smart contract. So in the same way that 0x protocol or Dharma or any of these decentralized protocols operate, you take the data and you submit it on chain to the contract, and in the next step you'll see that the contract will validate the submitted data, check the signatures, and if it's valid it will create an entry in our public policy registry. In addition to that, the policy registry will mint a non-fungible token that represents that policy, transfer it to the insurer, and that can be used for a number of things, but one example being that the bearer of that policy token would then receive all the premium payments made for that policy. I have a flow diagram here. I don't really have a lot of time to talk about it, but it essentially describes the steps that I just mentioned above. And the idea here is that there are limitless possibilities for the types of policies that you can create with this protocol. We're working on term life, we're working on some parametric and index-based policies, and the actual individual implementations are left up to those contract templates. So you can be agnostic to a number of things, like the claims management or sort of whatever it is that you want to include within that smart contract. I mentioned before that it's supported by a relay network, so if you're not familiar with that term, a relayer, you can think of it sort of a non-custodial, two-sided marketplace where application orders are posted and quotes are posted. They maintain order books, and essentially anyone can create their own if they are interested. At ConsenSys, we're going to be building a relayer that will support this network, but again, the tooling will be available for anyone to be able to do that. So if you're interested in learning more, you can check out the GitHub repo where the Solidity code exists. There's a JavaScript library that we're publishing shortly that will allow you to create application orders and quote orders and do all of that manual work through the library. Looking for feedback, so this is under active development. So if you have ideas or thoughts on things that should be included or what can be done, love to hear about it. My contact info is there. And if you're interested, we are hiring at ConsenSys, so thank you.
Thank you, Matt. Impressive stuff, as always. We don't expect anything else. Do we have any questions for Matt? Magda, please.
So could you actually tell us what the incentive would be for an underwriter, a traditional underwriter, to use Asekuro as opposed to an automation in-house by them?
So there are a number of benefits to both sides in this type of a model. Essentially, from the insurer side, you're essentially getting a pool of applicants that you can receive additional business lines through. There's a lot of efficiencies to be gained from this type of an infrastructure where there's less back and forth. We are providing the infrastructure in the form of smart contracts, so it's essentially somebody who is a carrier who wants to participate can basically plug into this network and they don't have to worry about building any of that out themselves. And the fee structure is a lot less, so I didn't really have time to talk about that, but there is a fee mechanism built into this where you can pay a very small amount that goes to a relayer when a policy is booked through that platform. So.
Does this answer your question? Thank you, Matt. Again, a round of applause for Matt.